Welcome back to Golden Rule Radio. We're watching the dollar push to an almost 12-month high, about 11 and a half months since July 14th of last year. It's at a new high, into the 95 range, probably going to reach 96 soon. The antithesis of the dollar, as we know, and our listeners know, is the price of gold coming down a bit. As I said a few weeks ago, we have some room with gold to come down here into the mid-1200s, which it's doing, corresponding to that dollar rally. Silver this afternoon, Wednesday afternoon, has actually touched just below 16. The next levels on silver to watch would be 1570, which is the previous low, and then the other previous low before that is about 1550, 1560. But I'm going to let Miles jump into the charts. What do you have to say, Miles?
Yeah, Robert, always glad to have you back here at Golden Rule Radio. And I think bringing up, starting with the dollar, is definitely the best place to go. If you had been here last week, you'd know that Tori and I did talk about the dollar coming up probably to about 96. So I hope you had a nice trip. Welcome back, as we say. And we'll see the dollar making that third bounce up, what I believe is a 3 drives Elliott wave push up with declining RSI. So we've got divergence against the RSI coming up to 96 on the dollar. That's the 50% line. That is a halfway mark between the 104-ish high and when we got down to, about 88, 89 on the dollar price over the last year. So this is a pretty reasonable point for the dollar to possibly find a ceiling here. Lo and behold, you compare that over to the gold price, and we're seeing pretty much the exact opposite. Gold is coming down to about 1245, which is the 50% line. I know, Robert, you were talking a couple weeks ago. I mentioned if we hold 1285, that's good. If we push through 1285, your next number down was 1245, 1250. We're coming into that now. That is also the 50% line between the low and the high. And we're also seeing divergence against RSI as we come into that point on a 3 drives pattern. So flip either chart upside down, you see the other. They're definitely mirrors.
That's a good way to put it.
And everything, as usual, continues to line up with what is the U.S. dollar doing.
Yeah, that inverse correlation that you just pointed out is really key for anybody that's calling in and talking to us. The first question is usually, why is gold doing what it's doing? And my response usually is, you have to look at what the dollar is doing and why the dollar is moving in that direction.
Yeah, and it seems like these markets have really liked that 50% level. I mean, if we look at the longer term charts with the dollar from 72 up to 103, it stopped right at the 50% level on the decline that we saw at 88. And now we're seeing it rally back into that 50% level of 96. So I like that. I mean, that's at least consistency that we can see within the chart. And hopefully that's what plays out. I would not be surprised at all to see the dollar rally peter out right here at this 50% level. That would correspond to the price of gold with this decline petering out right at this level of 1245-ish. And that would correspond also with the seasonal strength in the price of gold, which here we are nearing the end of June. Well, June's a weak month. We've been talking about that. May was a weak month. This is it. I think this is your opportunity before we move into July, August, which are stronger months, and then catch wind behind the sails with gold moving higher.
Yeah, and a lot of the times when you see those reversals, they do happen pretty quickly. So if we tend to linger around this 1245, 1250 range for a few days, we could see it come down past the 50% to the 618 fib, which is that 1212, 1215-ish level, pushing the dollar up a little bit higher. But you compare that to, say, the Dow, where we have seen the gold and the dollar pricing make literally about 2 steps forward, 1 step back in both positions, coming back to that 50% line. The Dow seemed to have exceeded that a little bit. It did go to the 618 before it turned, and we're now seeing the Dow fall. So here's my question. Since everything seems to be doing the exact opposite of what the dollar's doing right now, we certainly expect gold to. Do we think the Dow turns up when the dollar does finally find its ceiling and start coming back down?
It's possible, because we are still in a primary bull market with the equities market, according to Dow theory. So you can't really fight that trend. No, it doesn't have to always be right. We've seen some underlying indicators that signify that the equities market is in the process of rolling over, but we still are in a primary bull market with the equities market.
Well, I think it's a key point, too, that there isn't a direct correlation between gold and the equities markets. And, really the reason being, Miles, to your question, if gold is dropping and the dollar's climbing, should the opposite happen when the dollar drops? Yes, and gold should climb. In similar fashion, equities also have to readjust to a declining dollar strength, right? So as the dollar drops over time, that's why we're looking at a 30,000 potential target on the Dow industrials, right? That's an indication of inflation. That's an indication of long-term dollar weakness over decades and decades. And so, yes, I would expect the Dow to turn back around, or the equities markets in general to turn back around on a dollar decline.
Yeah, and I think we should clarify, we're not recommending to go jump into the equities market with a huge part of your portfolio, because there is still a significant overvaluation that exists there. But just according to the Dow theory primary trend, we're still in a bull market there, and may see higher equity prices before we turn lower in a big bear trend.
In fact, I would probably argue, and I hope I'm not speaking for both of you guys, but it may be a fair assumption. I would argue wondering where the equities market finds ceiling is more about how do we get out of our positions if we haven't done so already. So we mentioned some of the other commodities last week with gold, silver, and the like still coming down as the dollar's up. I think we should definitely follow up on that, because we have seen a pretty aggressive rebound in oil, at least at this point, which may give you the impression that maybe some of the commodities are turning up. But if you start flipping through the charts, that ends up not necessarily being the case. Copper still down, soybeans still down, corn still down. And it sounds like some of the analysts out there are not expecting to see that turn around anytime soon.
And oftentimes the reason we're going to point that out is because platinum and palladium and even silver to a certain extent can follow those industrial metals in a trend fashion. So they are very sensitive to the same pressures that you're seeing in copper and some of the other commodities, steel and such.
If you are going to see the U.S. dollar top out sometime soon here in the next month or so, where do the eyes of the world turn? Do they turn to Europe? We do have Draghi leaving soon.
Well, Draghi seems to be talking the markets one direction or another, depending on whatever he wants to say by the day or the week. So, the market seems to trade on whatever he decides to say in that day or week that he decides to say it. Not sure that he's providing much clarity to what their plans are for the European Central Bank, because they say 1 month they're going to end their bond buying program, then he just talks about extending it. So I guess we'll see what exactly they do rather than what he's going to say they're going to do, because all he's doing is talking the markets right now.
I agree. And you've got the Federal Reserve that's actually decreasing its balance sheet, right, and sort of dumping their bond position in some instances. You've got China deleveraging. So the European Central Bank and Europe in general are sort of counter trend with the rest of the world. So yeah, Miles, I would say eyes go on Europe, and particularly on the euro, because the euro is so weak versus the dollar that I think it's got nothing to do but start swinging that pendulum the opposite direction.
So that's going to about do it for Golden Rule Radio this week. We thank you all for tuning in. Definitely keep an eye on the markets over the next few days, because we are coming into these turning points in the dollar, in the Dow, in the gold and silver pricing, and we should see some interesting action by the time you don't end up hearing from us next week. We do want to say happy 1 week early, 4th of July. We will be taking a week off next week, so we encourage you all to go spend some time with your families on the extended holiday.
Thanks for listening. You can follow us on Twitter at ICA Gold. You can click the subscribe button below. Call us at 800-525-9556. Have a great week. Enjoy your holiday.